Welcome to Hedge Fund Trade Tips. I'm Tom Hayes, the founder of Hedge Fund Tips, and I'm going to walk you through how our private access membership works for individual traders, hedge funds, and institutional clients, as well as how you'll benefit from our system. First, a little bit about me so you can understand our background and credentials. A few photos to get us started with my lovely wife and two daughters. With Larry Kudlow, many of you know him from his years on CNBC, and currently he heads the National Economic Council in the President administration. With U.S. Senator Mitt Romney, with former UK Prime Minister Tony Blair at an Al Smith dinner in New York City a few years back, and with Goofy during our latest trip to Disney with the girls. I have extensive experience in the hedge fund industry, over a decade working in hedge funds, specifically long-short equity. I started my own firm, Great Hill Capital. I manage my own money as well as outside money, running a long-short equity strategy for accredited investors and qualified institutions. I have seasoned experience through multiple cycles, bull markets, bear markets, etc. Prior to going out on my own, I worked with a firm called Cornwall Capital. You may recognize the name from the movie The Big Short with Brad Pitt. Those of you who saw the movie remember they were one of the few firms who got the financial crisis correct from 2007 to 2009 and made a tremendous amount during that period. I was able to hook up with them through a thesis I had on shorting soybeans in summer of 2012, which was expressed through long puts with low implied volatility. The trade made 500% in 3 months, and we've been friends ever since. Exceptionally smart and talented guys over there for sure. Prior to that, I was managing director at Bedford Oak Advisors, a long-short equity firm also in New York. Not only did I generate investment ideas and help co-manage our portfolio positions, but through that position I had the unique opportunity of being placed in one of our public portfolio companies as the COO, Chief Operating Officer. We were the largest shareholder at Bedford Oak with 33% of the stock. Mario Gabelli of Gamco and Dr. Phil Frost, former chairman of Teva, were the second and third largest, followed by Warren Buffett's grandnephew, who's a friend of mine. He ran his own fund at the time, and now he heads his own public vehicle, which in my view has a chance to be the next Berkshire in coming decades. The chairman at Bedford was longtime friends with Warren, which is amazing when we went out to the annual meetings in Omaha, and I became friends with his grandnephew through another friend. Let's just say we had no problem getting a table at Goret Steakhouse, a favorite of Warren's and a popular spot during the annual meetings. So my role as COO was to sell off the non-core assets in the company and use the cash to source, negotiate, and close the purchase of an asset management firm. I interviewed over 100 different firms, alternative investment managers, traditional managers, and learned everything about what strategies worked, what strategies didn't. And within 18 months of being COO, we were able to close the purchase of an asset manager with $1.6 billion under management, and as a result, doubled the stock price in a short time, which was just tremendous. Prior to that, I was a successful entrepreneur in my 20s, built a large business from scratch, and graduated from Columbia University. So why am I doing this? I built a successful marketing and distribution business in my 20s, but I always traded and invested the profits in my personal account, and that was my true passion. I remember at Columbia, I would sneak into the business school library at URIS and read Market Wizards about George Soros and all the famous traders from the 70s and 80s who made their fortunes. So by my late 20s, after I was already self-made, and that was very important to me because I grew up middle class, so I wanted to get that taken care of, I met a legend in the business named Harvey Eisen, who was close friends with Warren Buffett. Some of the older viewers will remember his name from Lou Rukeyser's show, Wall Street Week. He was a regular, and because of my passion for investing and trading, I went to work with him at Bedford Oak. He taught me deep value investing and strong institutional fundamentals, how the big money invests. His first seed investors for Bedford Oak were billionaire Sandy Weil of Citigroup, Sam Zell of Equity International, Mike Bloomberg, Mario Gabelli of Gamco, and Dr. Phil Frost, chairman of Teva. So it was an all-star cast of investors and quite a tremendous experience. And because I started late in finance, I say later in life, but in my late 20s and not right out of school, I realized that most people will never get an inside look and really know what institutions look at and how they think. And if you don't know your competition, you can't expect to compete against them and win. You can compete, but to win, you really have to understand how they think. I grew up middle class around a lot of money, but I had to work my way through late grammar school and high school washing dishes, paper routes, and as a golf caddy. And for those of you who don't have the right connections or education, getting a leg into Wall Street is next to impossible. I was really lucky, and as you can tell from the site, I'm passionate about teaching, writing, communicating. and seeing regular people win. I don't believe in entitlement. I do believe in hard work, and the average person, average trader willing to take steps to better themselves and be consistent with the right information and skills should be rewarded. That's what Hedge Fund Trade Tips, the private access membership, offers to individuals and institutions, the right information and actionable ideas you can use to perform. So how does it work? First of all, it's our view if you're trading exclusively off of technicals on charts, you have a limited edge as everyone else knows what you're looking at as well. Many algorithms are programmed to take advantage of all the common patterns and sweep out the stop orders, knowing where a technical trader will bail. You've probably had it happen to you and couldn't understand why the stock broke down, took out your stop, and then subsequently reversed to new highs without you. It's not personal. It's just that most of what is out there technical is already known, so that edge is limited. We're not against technical analysis, as it is a factor in what we do, but it's not the key. Yes, there are statistical advantages in some patterns, and you will find traders who are extremely successful exclusively using technicals. They're the exception, not the rule. But institutions who move markets, the big money that moves prices, are steeped in fundamentals, and you have to know how they think or it's more difficult to compete and win. Furthermore, using technical analysis exclusively takes you out of many positions too early, because the first time the wind blows against you, you're more likely to bail as you only have one criteria to go on. If your fundamental thesis is sound and repeatable, it will give you the staying power to let the technicals run their course and return a winner. As Warren Buffett says, in the short term, the market is a voting machine. In the long term, it's a weighing machine. Lee Cooperman, who I met at a Titans hedge fund dinner hosted by Mona Crispy in New York City, always says, "The algos buy strength and sell weakness. I made my billions in the market buying weakness and selling strength, and all of my friends who made billions did the same." This means if you can ignore the day-to-day noise and have a solid thesis behind you, the trade or investment will work out in time, as the fundamentals confirm the technicals that triggered you into the position to start with. In other words, if you have a solid technique based on sound fundamentals with technical triggers, and you manage your sizing and risk appropriately, you can win over time, and you have a huge advantage over the big institutions because smaller account size can more easily outperform. You're more nimble, and you can be in instruments that generate higher returns for the same underlying moves. Either the larger institutions can't be in these instruments because of their mandate, or they're just managing too much money and there's not enough liquidity for them to take advantage. This is one of those rare instances that David is going to beat Goliath with his slingshot every single time once you have an efficacious method and a system in place. So now a little bit about Hedge Fund Trade Tips system for private access members. First, the system combines general market conditions and trend with an in-house earnings per share and estimates model that accounts for changes to the price to earnings multiple. You're not going to find this kind of combination of analysis publicly available anywhere else. Versions of this method are used by larger institutional money managers on a longer term horizon and in a very different way. Second, the system deploys several key technical factors that are effective in triggering action when the fundamental data and earnings model points to a probabilistic edge. These technical factors navigate through all environments, long or short, when coupled with the earnings model. The system, third, deploys our extensive hedge fund experience with options to magnify returns for each underlying stock's movement. Unlike most, we're going to benefit from the last 30 days of time decay before expiration versus being at the effect of the melting ice cube known as theta. Many investors and traders buy out-of-the-money options that have low statistical probability of playing out, and 90% of them expire worthless. By contrast, we're rooting for time to pass because of the way we've structured our positions to benefit as time decays. Fourth, the system works the same for both long ideas and short ideas across market environments. And finally, fifth, you're going to learn risk management, since no trader or method system is right 100% of the time, although you'll be amazed with our win-loss ratio when you go through all of our trades during your trial. Utilizing proper risk management is paramount to winning over a series of trades and having consistency in your results. You can see many of our articles and quotes on MarketWatch, Zero Hedge, Seeking Alpha, Talk Markets, Fidelity, and others. So how it works, you're going to get two things. First off, our PINs, position idea notifications, followed by PCNs, position completion notifications. So getting in the trade and getting out of the trade. Now, let's go to the website. Here we are. I'm a member of Hedge Fund Trade Tips. I'm logged in here, and we're going to look at one of these situations of a position completion notification, and then you can see the original position idea notification or the PIN. So here we are on September 9th. We closed the position, existing clients only, not new. Closed the November 57.50, 65.50, 62.50 Gilead call spread for a credit of 393 or best. This is a 20.92% gain in 13 days. Here's the original pin, which we'll look at in just a second. And here's the screenshot. So the 393 is right here. And here was the original. This is September 9th was the closing. And the original was August 27th, where we said buy the November 57.50, 62.50 vertical debit bull call spread on Gilead for 325 or best. Don't pay more than 335 or you're chasing. New members read this first. That's about the risk management. So here's the screenshot there. So now let's go back and look at a few others. And why don't we go back here? Okay, so here was Cisco closed the call spread on Cisco for a credit of 408 or best. This is a 15.58% gain in 3 days. Here was on September 5th, closed the October 120-125 Marriott call spread for a credit of 385. This is a 14.92% gain in 7 days. Let's get some more here. And you can go through these yourself during your trial. Here closed the EWY, I think that's South Korea ETF call spread for a credit of $4. This is a 19.04% gain in 34 days. Here was closed the October 115-120 CAT call spread for a credit of 378. This is a 24.7% gain in 29 days. Here closed the Prudential call spread for a credit of 393. This is a 16.27% gain in 2 days, etc. So Intel 15.2% in 21 days, and Silicon Valley Bank 16.66% gain in 8 days. BlackRock 23.14% gain in 6 days. CSX, 17.19% gain. Anyway, you get the point. So go through those yourself during your free trial. And let's take you to how you can do that. So you see how that all works. Even if you haven't done debit call spreads or put spreads before, you can call your broker and just read it over the phone, or they'll have a simple tutorial on how to place debit spreads on whatever platform you use. So now that you see that everything works, I'll show you where you're watching this short video and underneath where you can take a look and see a lot of our recent performers. So let's go up to right here. Okay, under the video, you're going to see this when you're logged on. Autodesk, 21.05 in 5 days. Amphenol, 27.41 in 4 days, etc., etc., etc. So just below here, we're going to go through your different options on how to get started with the free 14-day trial. The key here is to save time and make money. I've developed this method by trial and error over a decade of time and a significant amount of research and investment. You may be able to get your foot in the door and work at hedge funds for many years like I did, then start your own firm and potentially find a niche that works after years of effort and huge investments of time and money, or simply take a shortcut by utilizing my method to benefit now and save 10 years of trial, error, time, and money. As the old saying goes, you can always get more money, but you can't recover lost time. Time is our scarcest resource. So how to take advantage. As of February 10th, 2019, Hedge Fund Trade Tips notification service for private access members became available not only to hedge funds and institutions, but individual and proprietary traders as well. Historically, hedge funds have paid me as much as $90,000 per year for my outside research and access, which is brilliant for them because it saves them a fortune by outsourcing a portion of their research budget at a fraction of the cost. The average analyst at a decent sized hedge fund makes about $250,000 per year to generate maybe one good idea per quarter that makes the firm money. The average portfolio manager makes 1.4 million. So to get better results for a fraction of the cost is simply smart business, and that's why funds do it. I'm not going to charge you $90,000 that I've charged hedge funds, or the $250,000 to $1 million plus that the information is worth for even a smaller size fund. Because of this platform, I'm now able to scale up to a larger group in order to make it economic across the board. Even better is the fact that you can try it out before you buy it with our free 14-day trial, so you take no risk. It's the perfect example of an asymmetric trade which has all upside and no downside to try it out. There are two options available to individuals and two options available to institutions. So here are the individual options, the standard and the VIP, and the institutions, small institution and large institution. So option number one for individuals is our private access membership, the standard version. You can read along on your site. And what you're going to get is, number one, you're going to get 10 position idea notifications, or pins we call them, minimum per month. So approximately one every couple of days. Some days you'll get 2 or 3, and then you may go a few days without any at all, depending on market conditions. We identify the company, long or short, suggested timing, and the best expression, call spreads, put spreads, suggested pricing. Our ideas average 2 to 6 weeks in duration. This gives us an edge because we don't have to compete with the computers and algos on an intraday basis. Humans move in seconds, computers move in nanoseconds. You now have football fields of PhDs on trading floors programming the computers to trade intraday. We stay above the fray and use the extra time to our advantage. Second, you're going to get 10 position completion notifications, or PCNs, minimum per month. We identified the suggested time to complete the position and suggested pricing. We're not just going to get you into the trade, we're going to get you out of the trade as well. You can start your 14-day trial right now for free. So you try it for 2 weeks, you look under the hood and see the results for yourself. After that, it renews at just $197 a month with no contracts. You can cancel at any time by emailing info@hedgefundtips.com. If you want a discount, you can opt for the annual plan, which is just $19.97 per year, and that will save you $367 over the monthly plan. Whichever plan you choose, you have 14 days to try it before you're charged. So that's the standard, and you can subscribe here monthly or subscribe here annually. Next is the VIP plan, and this is the second option for individuals, the private access membership VIP. So the requirement here is that you have a suggested liquid net worth of $250,000 or more, or you're currently managing outside money via hedge fund, mutual fund, RIA, or family office. You're going to get everything in the standard package, plus you're going to get unlimited direct access to me via my cell phone Monday through Friday, 9 a.m. to 1 p.m. Eastern Time. You're going to be able to take advantage and get that access like my hedge fund clients and institutions. So you're going to get the same service that hedge fund clients have paid me $90,000 per year for my outside research, and many multiples of that when I was on staff in-house. When you have a question about anything markets related, portfolio related, or trade related, you'll just text, email, or call anytime during those available 20 hours, and I'll connect with you to answer your questions and work with you to improve your results. That's the VIP concierge service for individuals. And the VIP private access membership is just $497 a month after the free 14-day trial. So you can try it out before you buy anything, or you can get the discount by opting to pay annually at just $49.97 per year, and that'll save you $967 over the monthly plan. Institutions you have that need more than one seat have two options. They're going to receive everything I described in the standard and VIP private access memberships, but can have more than one person or IP address login at once. Password sharing beyond the number of seats purchased is detected by the system and suspends the account. So small institutions that need 1 to 5 seats are just $9.97 a month after the free trial, or $99.97 for the year, for a savings of $1,967 over the monthly. And large institutions that need 5 to 20 seats are just $1,997 per month, or $19,997. If you opt to pay annually and get the discount, you'll save $3,967 over the monthly. So once you click and subscribe, whichever plan you're choosing, the standard, the VIP, the small institution, or the large institution, and then either monthly or annually, you're going to be emailed a registration link to set up your login and password. Once you've done that, the members tab will open up at the top of the site. I'll just show you quickly here, right up here. And so you're going to learn how to place these trades, how to manage risk, additional resources, and how to set up the text alerts to your cell phone so you can receive the pins and PCNs in real time faster than just standard email notification. And at the end here, Warren Buffett always says, price is what you pay, value is what you get. And that's really an important point because, if you were looking for a heart surgeon, you basically want to shop. You don't want to shop around for the bargain. You go with the one with the best skills and experience to get the desired outcome. So if you're trading a small account and a couple of contracts at a time, one trade pays for your membership each month, and you get 10 plus pins and PCNs each month to build up your account. If you're a professional, this is an easy decision because you're getting a PM and an analyst experience all in one, completely outsourced at less than 10% of the cost and no long-term commitments. Lowering overhead and improving results is the perfect trade for small and large firms alike. So pick the best option that fits for you above and try it out for 2 weeks. Go through all the past trades and then take advantage of the pins and PCNs as they start coming in. If it's not your cup of tea, just email us to cancel@info@hedgefundtips.com before the end of your trial, and you won't be charged. But our experience is that individuals and firms who take the trial stay with us for the long term because they see the results. It's not what it costs to join. It's really what it costs if you don't take advantage and see for yourself. So with that said, I look forward to working with you, and thanks for taking the time to invest in yourself.